Welcome traders. In today's video, we're going to be discussing the price cycle. This is probably one of the most important aspects of supply and demand and learning how to trade with the banks. So you're definitely going to want to stay and watch the whole video. Understanding the price cycle is learning to identify when contraction is happening, expansion, retracements, and reversal. These four aspects make up this price cycle, which repeats itself over and over. These are some elements to the market cycle. Contraction, which is an equilibrium in the market. It's when the market is also ranging in a consolidation. Expansion, when price breaks out of the contraction zone. Retracement, it's when price retraces to fill in any imbalances or fair value gaps. It is looking for inefficiencies. Reversal, when price absorbs liquidity and continues with the trend. What is contraction? Contraction is caused by low institutional volume. It's when the range is confirmed that it's getting smaller and it's mostly sideways movement. What is expansion? Expansion is caused by increasing institutional volume, which is the opposite of contraction. The range starts opening up, taking out these lows and highs. It's when price breaks out of the contraction phase. This is where smart money accumulates positions at discounted prices and enters into the market. Once price expands out of the contraction zone, it will reprice us with an area to execute a position by leaving behind a supply or demand zone. So in this example, you can see we've got this contraction happening. It's this consolidation and ranging motion. And then we have this expansion out of the zone where we have these gigantic momentum candles. We have this expansion to the downside and we left behind a supply zone. What is retracement? Retracement is when price pulls back to a supply zone or value zone. This is the place where the expansion occurred out of the range. So here we go. We've got this ranging consolidation, contraction zone happening over here. Then we have this expansion out of the zone to the downside. We also have this liquidity forming here, price to retrace back up to the supply zone. It takes out these fair value gaps and imbalances over here, taps in and mitigates this zone. You can see these massive rejections to the upside, and then carries on with the trend. After price expands, we must look for any inefficient price action created during the expansion. This is it over here. The fast move will give us an area where we can assume price will retrace back to fill in these imbalances. When we have this gigantic move to the downside, inefficient price action is left in the zone, which means smart money needs to come back to this area to balance its books. Here's another example. We have this contraction phase, we have expansion to the downside, then we have this retracement back up to the zone to take out any imbalances, tap into the supply zone, mitigates it, and then carries on with its movement. This allows us to identify any point of interest where we can set our orders. Price expands, which creates inefficient price action. Price retraces back to fill in any imbalances, allowing buyers and sellers a fair opportunity to liquidate the market. Then continues with its intended direction. What is reversal? A reversal is when price moves in the opposite direction from what the current market direction was moving in. The aim of the reversal is to seek out any liquidity and take it out. This includes equal lows, equal highs, trend lines, channels, fair value gaps, and imbalances. Here is an example of the whole market cycle playing out. So as you can see, we've got this contraction phase happening over here. Then we have this gigantic expansion with these institutional candles to the downside. We have this liquidity that forms over here, more liquidity over here. Then it takes out this liquidity. It retraces back to the supply zone, mitigates this zone, and then reverses all the way down, creating more liquidity over here, tapping into this fair value gap and imbalance over here, and then carrying on across the trend. Let me show you some examples in the chart now. This is the Bitcoin chart, and I wanted to give you guys a macro view and a micro view. Even though the price cycle is happening at the macro level, it is also happening at the micro level. So we get these price cycles within price cycles. We have the macro price cycle and then the micro price cycles within them. And I'll show you right now. As you can see over here, we had this massive drop, consolidation over here, and then we had this massive drop, and it left behind a supply zone over here. Price came down. It took a while to get back up to this zone on the macro level, but on the micro level, it was doing the same thing over and over again. Here's a great example. We have this contraction phase over here. Then we have this expansion out of the contraction phase, where the institutions enter into the markets. We leave behind a supply zone over here. We do it again. We create another contraction phase. We expand out of it. We leave another supply zone. Then price moves, forms liquidity here, drops a little further. It taps into this demand zone over here. Then price retraces back to tap into this supply zone where we have this massive drop and price reverses. Along the journey, it does it again, creates a contraction zone, expands out of this zone, retraces back into the zone, and then we have the reversal back into this demand zone where it plays out again. We have this contraction phase, we have this expansion out of it, then we have retracement back into the zone, reversal, retracement back into the zone, reversal, and then we have it happening again. We have this contraction phase, massive expansion, tapping into this demand from the previous zone, then retracing back up into the supply zone, then reversing, taking out this liquidity, forming more liquidity, coming back up into the zone, and then creating the cycle again. We've got the contraction phase, the expansion leaves behind a supply zone, comes all the way down. It breaks this liquidity zone because price always likes to seek out and take out liquidity. Then it retraces back into the supply zone where it reverses again to take out this liquidity. Comes back into the zone and continues the same thing over and over again. I'm sure you guys are starting to notice this cycle now. It continues over and over. This is the cycle of the banks and the institutions. By learning each phase and being able to trade it correctly, will give you massive edge in the markets. Thank you for tuning into this video. Have a look at this other video right now if you want to know more about supply and demand and smart money concepts.